David is one of those speakers. David is one of the very, 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 very few people I trust on the topic of crypto, blockchain, and Bitcoin. So he's going to be talking about what is blockchain technology, like what is this Bitcoin thing everyone keeps talking about? Because I know, actually I'll just do, by a show of hands, who would categorize yourself as you're still in the, what is this Bitcoin thing all about? I don't really understand it, but my nephew is a millionaire. Right? That's most people, like, you see it on the news, don't really have any idea what in the hell it is, but it's like everyone keeps talking about it, right? David is going to, in the next 30 minutes, explain the why behind cryptocurrency blockchain. It's not a sales pitch, there's nothing for sale. He's not even going to encourage you to buy any cryptocurrencies because it's not a get-rich-quick scheme. I want you to understand in the next 30 minutes why the technology behind crypto is so interesting, because once you understand that, you see some of the ramifications for the future long-term, and some of that actually has a lot to do with real estate. So David is an expert. He used to be the CTO at FEE, the Foundation for Economic Education. He's in that like Venn diagram of the very few people I trust who understand the intersection between technology and economics. He actually recently bought a house with Bitcoin. So he's one of the very few people I trust that if he gave me advice on anything related to crypto, I would just trust him without having to fact check it. When he says something, I know that David knows what he's talking about. So without further ado, David Vexler.
Thanks a lot. I really appreciate being here today. This is my wife's Bitcoin cheesecake, my favorite food, but she's living on a keto diet, so I came here to talk about Bitcoin and cheesecake, but I'm all about cheesecake. So a bit about me. I was going to speed through the slide, but Caleb taught me to talk a bit about my personal story. So I quit my full-time job as Chief Technology Officer a month ago to focus on Bitcoin. And that's because I believe Bitcoin is important. And if there's one thing that you learned today, it's about why we need Bitcoin. I can talk for hours about blockchain technology, trading, but one thing what you learned today is why Bitcoin is so important. So in 2018, 2017, a friend asked me to help with this Bitcoin wallet. He forgot his password. And didn't know that much about the Bitcoin wallets themselves, but I'm good with technology. I figured I can brute force the password, and I did. And it was not too difficult, so I created some Google ads, and instantly had hundreds of leads coming in asking for help to get your forgotten Bitcoin wallet password back. And I built the software. I can run billions of password ideas based on which you remember and brute force your Bitcoin wallet password. So that's my service, walletrecovery.info. That's one thing I do. It's gotten a ton of leads. Then Google blocked all crypto ads, and so I spent my time brute forcing Bitcoin passwords and fighting Google ads to sneak my ads through. But it's been very lucrative, and a month ago, I had my job as Chief Technology Officer, and I was just making so much more money in Bitcoin, and I really wanted to be in this space. I remember being in high school in in the year 1999, and I knew that the web was this big thing, but I didn't know how to be part of the evolution. I became a web developer, but I always felt like I could have ridden the wave more in the front as a leader. And so, even though I had this great job as CTO, I wanted to do this full time. And so, I also run a hedge fund, Bellum Capital, since 2018. It's kind of unbelievable that me as a software guy keep running a hedge fund. But really, so my new thing is the Bitcoin consultancy. I provide advice on how to buy Bitcoin, how to store Bitcoin, how to incorporate it in your business, how to trade it, everything around how to integrate crypto in your portfolio and in your business. All right, that's enough about me. Let's talk about why Bitcoin is so important. That's the main thing I want you to learn today. So what is Bitcoin? So you can look at it in a few different ways. Bitcoin is an idea that an anonymous person or group, Satoshi Nakamoto, proposed in 2008. And that idea is in this white paper. That's one part of Bitcoin. Bitcoin was also the code that Satoshi introduced. And every single line that Satoshi introduced has been rewritten by the development team, which is now many hundreds of people. There's now, you can see there are 836 contributors to the Bitcoin code. So the code is completely, everything is up for grabs in Bitcoin because it's changing. And it's also the software. It's a software network. That's also Bitcoin. And you can run Bitcoin, a full Bitcoin node, on a tiny little Raspberry Pi computer and be part of the network. But I think this is the main thing on Bitcoin is. So if you remember one thing about what is Bitcoin, it's this, 21 million. What's this? It's the number of Bitcoin that will ever exist. So the most important part about Bitcoin is the scarcity. And Bitcoin is ultimately, everything else is up for grabs. The software has 100% rewritten. Everything Satoshi introduced has been rewritten from scratch. The network has had major upgrades. The one thing that will never change is the commitment of the Bitcoin community to this number. There will only ever be 21 million Bitcoins. That's the single most important thing about Bitcoin. That's what makes Bitcoin different from dollars, every other currency, different from gold. It's the commitment by the community, the idea, there will only ever be this much Bitcoin. But 19 million has already been mined. So it's basically it's a decreasing amount of mine every 4 years. Number of Bitcoin is halved. So by the year 2140, 100% of Bitcoin will all be mined, and almost 90% has already been mined because it's decreasing every 4 years. It's the commitment that it's a scarce asset. No other crypto started with this idea that it's a hard limit, and it's the single most important fact about Bitcoin, the scarcity. And I'll talk about how that works. All right, so why is Bitcoin? And Satoshi, he was a software developer, but he had an ideology that he introduced. And the basic idea was that central banks have not proven trustworthy as custodians of the monetary system. So we all know about hyperinflation. And in the 20th century, there's been like almost 70 episodes of, these are all examples of currencies that were hyperinflated into oblivion, 100 billion, trillion, quintillion. So every currency ultimately every fiat currency suffers from inflation. And every empire has had its currency ultimately inflate to oblivion. We don't know when the dollar's turn is next, but we're seeing that now, accelerating inflation. And why is that important? So this is a list of all the 20th century currencies that were hyperinflated into oblivion. And the dollar has lost over 96% of its value since the Federal Reserve was founded in 1913. So your dollar today is worth 4% of what it was worth when the US went off the gold standard. Right, it was a gradual process of going off the gold standard, but now it's lost 96% of its value. But why is that a big deal? Why is inflation that big of a deal? So looking at GDP, and we can see that there's business cycles happening every decade or so. And why do we have periodic business cycles? Well, I'm going to talk about that in a second. So one of the main harms of having a fiat currency is the fact that we have business cycles. And why does that happen? Well, basically, the government, the central bank, uses the monetary system to stimulate the economy. So what they do is they lower the interest rates. They make money available to borrowers that lowers the interest rates. And that causes a lot of new investment to happen. And they think this is good. The GDP goes up. The problem is that the savings rates, they go down because when interest rates low, savings go down. And the problem is that we have all kinds of malinvestment. And I'll explain that in a second, but business cycles are one consequence that we've had every 10 years or so, a recession caused by the Fed's manipulation of the money supply. But an even bigger problem is war. Because until the 20th century, you did not have total war. It was not possible to mobilize the entire economy toward war. You had to raise taxes and collect gold. But when the state could suddenly print infinite money, they could redirect arbitrary parts of the economy to whatever cause they wanted to support. So total war was only made possible by going off the gold standard, being able to print money. So this is what Satoshi had in mind when he created Bitcoin. So when you look at the savings rate, we can see that over the 20th century, as each country, and now every country has gone off the gold standard, went off the gold standard, savings rate plummeted. Why? Because the government lowers the interest rates to one, to give money to the cronies, and two is to create this artificial boom. The problem is savings is what is necessary to expand production. So why is savings so important? Well, human beings create labor, and some of the labor we consume immediately, and some of the labor we invest for the future. All human progress depends on human beings foregoing some present consumption to create a better future. Right? It's intuitive. If you spend whatever wealth you produce now, you can't invest in a better future. You can't build factories and roads and bridges. And when the government lowers the interest rates, they create new investments, but there's no savings backing that up. So what happens? Well, now you have more money competing for the same amount of savings, the same amount of investments. That causes asset prices to go up, the stock market goes up, but there's not enough supply, there's not enough capital being created to support all those new investments. What you have is malinvestments. So you have the boom period when the government creates all this investment activity, but then it sets up for a crash because there's not enough savings happening. There's not enough raw materials, not enough web developers and engineers to support all those new investments, and you have the crash. And then you have the business cycles. And the Fed tries to intervene in this by further manipulation of the money supply. Now interest rates are zero, so there's little they can do. The system becomes ever more out of sync, and you have business cycles. So we can see this malinvestments in the stagnation we've had as the US has progressively gone off the gold standard. And if you want to understand this is a great website. WTF happened in 1971. What happened then? Nixon closed the gold window. We went fully off the gold standard. Asset prices kept increasing, but the wealth of the average American stagnated because you had this massive malinvestment created by creating all this easy money, but disencouraging savings. Savings is essential for us to create a better future. You must forego current consumption to invest that capital in the future. And savings rates are only going down. It's creating this massive bubble that's been supported by the petrodollar. Other countries demanding US dollars. But once other countries no longer want our dollars, we can't pay our debt. We don't have enough savings to support economic growth. The system is becoming ever more unstable. This is why Satoshi created Bitcoin. He was quite explicit about this. So this is our choice. We can either invest in savings, or we can have infrastructure rot. It's not our grandkids that are paying for this. The rot is happening now. The stagnation has been happening since 1913. The malinvestment, creating all this easy money investments, that's not backed by savings. That's not backed by foregoing consumption. And it's very extremely addictive to just print money to increase asset prices in the stock market. But the middle class pays for this because it doesn't create any new actual wealth. It's just a wealth transfer to the investment class from the working class. So this is why Bitcoin was invented. And this trend, since COVID, only accelerated. What happened during COVID? We had this massive shock to production, and the government created all this massive consumption. You can see there in 2020 had this jump. 40% of all dollars that ever existed were created in 2020. Why? Because you had this massive jump in production.
That.
But the government wanted to increase consumer demand. So all the savers had dollars. Yeah.
What was that stat you just said? Can you repeat that?
40% of all dollars that ever existed were created last year. This is the M2 money supply. M2 is the broad money supply. The M1 chart I'm not showing you because it doubled the amount of dollars because the government eliminated savings accounts. Basically what happened is savings used to be different from checking because they had a limit on how many times you could withdraw it. Then the government said savings and checking accounts are no longer distinct, and so the M1 money supply basically tripled. But anyway, this is the M2 broad money supply, and you can see there's the jump in 2020. And as you can see, the curve is accelerating. Now, I don't like to give investment advice and make predictions, but what I can see here is the system is becoming ever more unstable. The government is creating massive new quantities of dollars. They are discouraging savings. They're encouraging consumption. right? This is complex. Basically, what's happening is we're eating our seed corn, right? Farmers have to save your seed corn for the future so you can plant crops. When you discourage savings through manipulation of the money supply, you eat the seed corn. That's malinvestment. It destroys your ability to grow the economy in the future. This is why Bitcoin exists. So this is our choice, right? Kind of stereotypical images, but the future, if it's going to be a good one, must be one which we save for the future. That's the essence of being human. Foregoing consumption to create a better future. If we keep eating our seed corn, we're facing disaster. That's why Bitcoin exists. So a little history about Bitcoin. We've had all kinds of money, right, in the past. Money is just a way to save wealth and have a medium of exchange. And we had cowrie shells and cattle and gold. And then we moved to fiat dollars. And we know what happened to fiat dollars. Now, Bitcoin as an idea goes back to 1981. There's a series of papers and proof of concepts that were introduced. And basically, they kept introducing new parts of the concept of Bitcoin. Ultimately, in 2008, Satoshi Nakamoto, right, the anonymous creator of Bitcoin, took all those ideas together and created a working concept. So how does it work? So basically, the essence of Bitcoin is mining. So this is mining gold. And when you mine gold, the supply of gold increases on average 3% per year. But if the price of gold goes up, the supply of gold goes up. Because if gold is more expensive, now you have more incentive to produce more. And every other asset in history works this way. Once it becomes valuable, the supply goes up. Right? If gold is not worth twice as much, you mine a lot more. If oil is worth twice as much, now shale oil becomes profitable, the deep sea drilling becomes profitable. Every other asset in history has a supply that responds to price. And Bitcoin is unique, even among cryptocurrencies, that the supply is totally constant, independent of supply. That's the single most important thing about Bitcoin. The supply of Bitcoin is constant, independent of demand. And how does that work? So Bitcoin is mined, and this is on the left my actual crypto mining farm. Here is a render of what farms look like today. So back when I could, I mined crypto on graphics cards. Now you can't do that. Now you have to have a commercial facility because it's all highly developed. Sounds very complex, but basically this is how it works. Every 10 minutes, there's a new block being mined. Every 10 minutes, there's a block. And the blocks are linked together by cryptographic signatures. And all the crypto miners in the world are competing to be the first one to mine the block. It's basically like a lottery. And depending on how much hash power you give into the system, increases your chance of winning the lottery. And right now, every Bitcoin block is worth, I think, 12 Bitcoin. And every year, it's halved. So you enter the lottery by buying hash power. You win a block every 10 minutes. And the important thing is that the difficulty adjustment. So every 2 weeks, the difficulty of mining a block is adjusted based on how much hash power there is. So the more people are mining it, the more difficult it becomes to mine those blocks. And the result of this is that even though the hash power goes up and down, so in 2020, June, China banned Bitcoin mining. And the supply of Bitcoin mining dropped by half. But the difficulty auto-adjusted, so that yeah, go ahead.
I just want to add a comment that if China bans something, it's usually a sign that it's a morally good thing to be doing. So continue.
Yeah. So Jim Cramer was like, after China banned Bitcoin, he's like, sell Bitcoin, it's going to crash. And within a month, Bitcoin doubled the price. So it's like a meme now. Like he's holding his head because he lost all his money because China banned it. So the mining supply dropped by half, but the Bitcoin output was constant. Because the network auto-adjusts production based on the hash power available. All right, so that's, I could talk hours about blockchain technology, but that's the gist of it. Fixed number of Bitcoin, 21 million that ever exist, and constant supply rate. What they found is there's a pretty good correlation between the number of people using Bitcoin and the price. right? Otherwise, in other words, it's a network effect. The more people use a network, the more valuable it becomes. That's how Facebook became valuable. The more people are connected, the more likely your friend is to be using the same network, the more valuable it is. And so actually the price of Bitcoin has a very steady growth if you look at if you look at the logarithmic growth. It's pretty steady. It's averaged pretty constantly 200% per year. That's tripling in value every year. So there's been like two years where it was down, but otherwise it's a pretty steady growth that's consistent with Metcalfe's law. The more people in the network, the more valuable the network is. And so that's the main tool for making predictions about what the price will be in the future. Yeah.
Just a question, I'm sorry, I'm so new to this. So are all Bitcoins worth the same amount?
Correct. Each Bitcoin, it's a market commodity, so it's a tradable asset. So yes.
How would you compare ETH to Bitcoin?
I'll cover that actually in another slide. All right. So Bitcoin has been the best performing asset of the decade. It started with zero, technically as infinite growth, but it's performed really well. But what's more important is how steady the growth has been, pretty much averaging 200% growth per year. And I didn't get into Bitcoin for a long time because I believe in gold. I listened to Peter Schiff. I don't know if you guys know who he is. He hates Bitcoin. He thinks it'll go to zero. And I listened to him. This is actually me holding my gold bar. I was buying physical gold. And I thought gold was the future. And I realized I was wrong eventually because gold is not as good. It's not instant, global, internet native money. And more importantly, governments have been confiscating it. Right? In 1933, FDR confiscated all private gold. And there's been many companies set up trying to create gold money. And they all have to have a gold vault. And governments keep busting it out, keep making that illegal and prosecuting people running it for money laundering, all kinds of crimes. It doesn't work because gold must be physically custodied. Yes?
I'm just curious, by a show of hands, who actually knew that not like some sub-Saharan African dictator, but in the U.S. in 1933, they confiscated all citizens' gold. Like, how many people actually knew that? So there's actual legal precedent for the government saying, if you own this, this interferes with our plans for inflation, we're just going to take your gold.
Yeah, in 33, FDR passed a law saying that if you have private gold, you must turn over to the government at a fixed rate. Obviously advantageous to the government. And they confiscated it. People went to jail for trying to hide their gold or send it overseas. And it's happened many times in other countries. So gold is inferior. It's inferior as a global money transition network. It's inferior as a store of value. I bought this gold in 2008, and it's doubled in price. Whereas Bitcoin has gone much higher. The market is voting that Bitcoin is the better store of value. And as the price of Bitcoin goes up, as more people use it, it becomes more and more stable. Because the price of Bitcoin depends on the volatility of the price of Bitcoin. Is a ratio of people using it as money versus people using it as an investment. So right now, most people hold Bitcoin, hold it as an investment. And some people use it as money. And then, so the more people use it as money, the less is available for speculation. And the more stable the price becomes. That's the long-term trend. Yeah?
Can you explain the settlement standard for Bitcoin versus like XRP or how do they plan on
Yeah, so settlement is an important concept. Bitcoin is a final settlement network. So when you use a credit card, it's just money on a digital ledger that can be reverted anytime. When Bitcoin transactions are irreversible, so it provides a final settlement network. XRP is a centralized cryptocurrency. The XRP organization has the ability to decide who's allowed to use the network, and they can reverse transactions. And Ethereum has reversed transactions. There was one big hack, and they just rolled the blockchain back. So Bitcoin is the only cryptocurrency that has a strong commitment to final settlement. They will never modify the blockchain because of fraud or anything else. It's all transactions are final. Does that answer your question?
Kind of, what it doesn't answer is, it's like if you were to go to like point of sale.
Yeah.
Right, you gotta have something settlement. If they,
No, you can have your own Bitcoin node, and you can execute transactions on the Bitcoin network, and you are settling your transactions. You can use an intermediary, but you can also be engaging in final settlement. You can broadcast your transactions to the Bitcoin network, right? So you don't need an intermediary. How am I doing on time?
You're good.
Okay. So this is the Bitcoin progress bar, bitcoinprogressbar.com. That's the website. And
Just like whatever.
I'm not going to make promises about what Bitcoin will be worth. It's just a way to think about what niche it could play, right? Bitcoin could become our daily money. Again, I'm not making any predictions. This is just speculation. If it has this role, here's how much it will be worth, right? So right now, gold is used as a industrial metal, and it's used as a means of savings. And if Bitcoin were to replace investment gold, it'd be worth $140,000 per Bitcoin. So whereas if Bitcoin was to replace all the world's money, it'd be worth $2.2 million. So this is just a way of thinking. If Bitcoin assumes this role, here's how much it would have to be worth. And I don't know, obviously Bitcoin cannot exceed all the wealth in the world. It has to stop at some point. But so far, for 12 years, we've seen very steady growth, 3x per year. And these are kind of the stopping points where, assuming it reaches this niche, here's how much it's worth. And again, not making a prediction, it's just a tool to think about. If it takes on this role, if it replaces the dollar, it's worth 2.2 million. But actually, people use all kinds of assets as savings because their currency is not sound. So savings accounts pay zero now. So people buy real estate, and they buy bonds, and they buy all kinds of assets, especially in poor countries, because their currency is no longer a means of saving wealth. And so the ultimate goal of Bitcoin, or maybe the ultimate potential, is it becomes the global means of saving wealth. And if that happens, it maybe is worth 10 million per Bitcoin. Again, not a prediction. It's just thinking about if it has this role, here's how much it's worth. BitcoinProgressBar.com. All right, so if you want to buy Bitcoin, which I'm not pitching, I'm just telling you what the big deal is. You go to Gemini.com or Coinbase.com, you link your bank account to ACH. It's very cheap to actually buy it, and you buy some Bitcoin. And this is the important part. You store it yourself. So you provide your own final settlement. With Bitcoin, you are the bank. You store the keys on your computer, or all of these are hardware wallets, right? So this is called a Trezor wallet. It stores your Bitcoin keys. So you are the bank. You directly transmit to the Bitcoin network. You provide final settlement. So again, you buy it on an exchange, then you move the Bitcoin to your hardware wallet. You get one for $40. Yeah.
So, my understanding, and correct me if I'm wrong, is Bitcoin is considered elite compared to other coins. And how many other coins are there? Thousands of other coins?
23,000 other cryptocurrencies.
But Bitcoin is different because it's got a set number of Bitcoin holders.
The most important thing is the commitment by the community to 21 million Bitcoin, yes.
Okay, so some of them don't have a commitment to their limit, and some of them have like the extra numbers that are their limits, and they reach that.
Yes.
Similar to our government printing money last year, let's just say that community doesn't decide to up the number of Bitcoin.
Right, so I'll cover that in a second, actually. So if you learn one thing today, oh, I'm sorry. You can buy, this is a hardware Bitcoin wallet. They range in price from, like, you can go for $10. These ones are worth $160 because of the touch screen. But the point is, the keys are on this device.
It's
You are the
basically a fancy USB drive.
Kind of, it's got a computer inside, and the computer signs Bitcoin transactions. So you are the bank, you provide final settlement. Nobody can revert the transaction. You're transmitting directly to the Bitcoin network. That's the important thing. Nobody can see how much Bitcoin you have. I have a Bitcoin wallet. Nobody can know how much I have. Nobody can take it away.
So if you go on Coinbase, which I've done, and I did Ethereum, so I want to switch my Ethereum to Bitcoin. When I bought my Ethereum, I didn't do anything, I didn't do any of this, it's just sitting in Coinbase.
Yeah, so there's a slogan on Bitcoin, not your wallet, not your keys. Sorry, not your keys, not your Bitcoin. So you have a claim on Bitcoin. You don't actually own Bitcoin. You have a claim to sell it or withdraw it, but the government can go and steal it. Coinbase can get hacked. Anything could happen. That's like a bank account. With this, if you withdraw it from the exchange, put it on your wallet, nobody knows how much you have. Nobody can take it away. Yes.
I can sort of answer that question as a noob who Isaac talked about this yesterday. Like, I know slightly more than someone who knows nothing, so I can describe this maybe easier. Owning Bitcoin on a wallet like that is the equivalent of owning a physical piece of gold that you store in a safe in your house versus owning a gold ETF somewhere else that, in theory, you could trade that for dollars, like it's worth what it's worth, but it's the equivalent of owning like physical gold that's physically in your house.
Exactly.
This could be lost and it could be stolen.
I'm going to cover that in a second.
So if that hardware failed, it was all over.
Okay, that's where I'm going. So this is how you keep it safe. This is a Bitcoin seed. So the way this works is you generate a secret. This is the secret, and you etch it on steel, or you can buy this. You get little letters, and you slide it into this thing, and this generates your Bitcoin keys. It's made out of steel. You keep it in a safe. If your house burns down, it survives. So I have some gold, a safe place, and somebody can see how much I have. They can steal it, but they have no idea how much Bitcoin I have. So I have this, and then I have a password on top of this. So if somebody steals this from my house, it's still useless because they don't know the password. But this is how I keep my Bitcoin, right? So I use this to send transactions to the network, but I load this wallet up with this seed that I generated. Yeah.
What happens if you die? Like, what would your family know how to get into your?
So this is what I did. I sat down with my wife and I said, this is my seed. Here's where I keep it. This is the password for my seed. If I die, you learn how to load the seed into Bitcoin wallet.
So you have to train somebody.
Or you can hire me. But
I said.
yeah, if you have a relative that died that has a seed, hire me. I will teach you. There you go.
And this is why they call it, when they talk about these like codes, essentially, this is like the crypto in cryptocurrency. It's not crypto because it's futuristic and techie. That word is used very specifically because of these codes that give you your,
Yes.
keys.
Yes. Yes. And the important thing is this is self-sovereignty. You are the bank. This is your seed. Keep it safe, right? You can keep it safe from fire. You can keep it safe from theft, but you are responsible for your money. You lose it, you lose the Bitcoin. Or you have to hire me for help. I can help a lot of places. Yeah.
Here is my question. Hire you for help. I have a Coinbase account. I forgot my password. I come to you to help me recover the password. What keeps a person that has nefarious aspirations doing the same thing and going out and grabbing all of these accounts that people have forgotten their password?
Well, so it is what I do is a trust-based business. People come to me with their wallets asking for help with the password. But you do have to have the wallet, first of all, right? You have to have the wallet. If you forgot the password, you still have to send me the wallet. I can't go out on the internet and find wallets. They're on people's computers.
Oh,
And there's a lot of fraud that happens that way.
So if there's fraud that happens, what then makes it secure?
Well, this device is a signing device. It's a hardware hardware wallet, and if you hack my computer, you cannot get to my Bitcoin. My Bitcoin exists only in the seed and this wallet.
So most people don't have that. Most people have a Coinbase account.
This is why I'm here telling you to buy my wallet.
You're welcome.
Right? I cannot help you if your Bitcoin is stolen because I can't reverse the transactions. If you forgot the password, if you got a word wrong on the seed, I can help you. If it's stolen, I can't help you. Yeah.
For that device, the wallet, what's the fail rate? What if you just throw it in a microwave?
Well, this is why you have this backup.
No, but like destroying the device, destroying the wallet.
It's easy to destroy.
Right.
In fact, one thing I did, the reason you see two wallets here is somebody broke theirs,
Right.
and I took it apart, and I swapped the motherboard to a working Trezor, and I got their Bitcoin back. That's something I did. So easy to destroy, that's why you have this backup.
So you could have your Bitcoin loaded into multiple wallets, like say 10 different copies, so you could lose all 9. As long as you have one of them, you're okay.
Well, the important thing is back up the seed on either on paper or ideally metals backup. Yeah.
Are those coins that you showed on that picture actual Bitcoin, or is that just like for visual reference?
This is how I market my service. If anybody
Okay.
can get a free gold-plated Bitcoin if you get my mailing list. So no, they're not real Bitcoins. Yeah.
So, can you just walk us through, like step by step, what it would look like in the event, so if you have one of these treasure devices, the seed, and you have a Coinbase or something that everything have a treasure device, that device fails. How do you use the code to access what was on that device? Or how do you use the code to access whatever repository or whatever database or whatever it is?
Yeah. Well, A, you can hire me to help you. I'll walk you through it, right? B, you reset your, let's say you forgot the PIN code for your Trezor. 1, you reset it, and it will ask you, create a new seed or load existing seed. So you say load existing seed, and you enter the seed.
Okay. So is the seed, so the seed is linked to some other database that actually works?
No. The seed is a random number that generates your Bitcoin keys.
So I get.
Sorry.
Yeah.
Yeah. Take me to lunch. Sorry, I want to cover a little bit more before we're done. Bitcoin, how is it used today? As an investment, obviously, but also in many countries it is used as money because they don't have good money. And now there's a lot of solutions for taking Bitcoin as payment for small transactions. And BitPay is a company that helps people buy real estate with Bitcoin. So as you heard, I bought my house in Bitcoin. It was pretty simple. The lender needed some extra documentation. So there's companies that are making this seamless. Yeah.
So, the BitPay similar to, I just heard about something called proxy.
I don't know what that is.
Like okay, so then I have a question. If you bought your house with Bitcoin, right, for someone else, is that, I'm assuming you're still using the title company for the transaction?
Well, so the way it works is the lender wants to know the source of funds. And so I show them that I sold this Bitcoin. So I had to sell it for dollars because the lender would not directly accept Bitcoin.
Okay.
Now, there are companies that are specializing in directly accepting Bitcoin as payment for real estate.
Yeah, I think one is proxy.
Yeah.
Out of Miami.
And it's still, that's a niche, but more and more people that are crypto rich, like say me, are using Bitcoin to buy real estate. Right? Mostly you have to trade it for dollars first. So who has had a client buy property with Bitcoin that you know of? Wow. A few. Okay, cool. So you'll be seeing more of that. So I think Bitcoin will be useful as a way to save wealth. Right now, real estate is a major way to save wealth. Bitcoin will also play a big role in that, and people will buy Bitcoin will buy real estate with Bitcoin. But besides that, more and more companies are adding Bitcoin to their treasury because they see the explosion in the supply of dollars, and they want to protect against that. Every other country is matching the U.S. Fed and printing money, and so more and more companies like Tesla, Square, etc., are putting Bitcoin on their balance sheet. That's a big driver in the price of Bitcoin. All right, so to finish up, there's 23,000 other cryptos. You'll hear a lot of pitches. My message to you is focus on Bitcoin. Why? Because it has that hard commitment to 21 million. And it's an idea, right? There's nothing stopping people from changing a line of code that sets a limit, but it's a commitment by the community. And the number two crypto Ethereum, if you look at their supply, it's like this. Every couple of months they change their mind about how much Ethereum is going to be created. There's no commitment. No other crypto has the strong commitment to the maximum supply. Yeah.
So I have a little Ethereum rig, and I get like $300 a month, just doing proof of work stuff. And so, are you saying that for people that are kind of doing that, it would be best just to kind of sell the Ethereum and buy Bitcoin, sell the Ethereum and buy Bitcoin, and just invest in it?
That's what. And yes. Another thing is that my full-time job is working in crypto, and every week there's a new project, and it's hard for me to know which one is a good investment. If it's not your full-time commitment, stick with Bitcoin. You're not going to go wrong. This is not investment advice. This is just my opinion. You have no idea if any of these other words will be around in 10 years. Yeah.
So, back to a little bit of basics, but somewhere on one of your slides you said that Bitcoin today, or that day, was worth $65,000. So if I were new and I wanted to buy Bitcoin, do I have to put money aside until I get to $65,000? So I have to Bitcoin, if you will, test of it, how do you that?
Yes. So
if you trade a house, your house probably worth like $65,000. You gave up however many Bitcoins value for whatever that house is.
So if I were to buy into any volatile asset, this is not specific to Bitcoin, I always recommend dollar cost averaging. Right? So you might guess well, you might guess poorly when the price is going up and down. But if you dollar cost average, if you buy a fixed amount every month, let's say, you're minimizing the risk of making a bad guess as to when to buy in. So if you want to buy, let's say, 1 Bitcoin, every month you buy 1/10. Whatever your risk tolerance and investment goal is, you slowly ease into it, dollar cost averaging a little bit at a time. That's how I recommend buying.